Today we're going to be taking a look at NRDY. The ticker is NRDY. It's a company that's using AI to change the way we learn. Welcome back to Value Hunter Investing, and if you're new here, I've been investing for around 15 years with a focus on value investing. So over the years I've learned a lot, made some mistakes, and just here to share some of my experiences and show you how I like to analyze stocks. Just please remember that this video is for educational and informational purposes only and shouldn't be considered financial advice. Always do your own research before making any investment decisions. So NRDY is a company that helps people learn online, and they have a platform that uses the technology, including AI, to connect students and tutors and experts. The platform offers different ways to learn, so a student can choose one-on-one tutoring. There's tutoring in small group classes, and there are self-study tools as well. Their main service is called Varsity Tutors, and it's the largest online learning platform in the United States, and students can get live online tutoring and classes on this website. The company was started in 2007 by Charles Cohn and was listed on the stock market 3 years ago by way of a special purpose acquisition company, or SPAC. The stock price has lost around 90% of its value since listing. The CEO recently bought around 12 million shares, taking his ownership from 22 million shares to 35 million shares, which got my attention. There's around 178 million total shares, and 34% are already owned by insiders, and that leaves around 112 million shares available to be publicly traded, or what's called the float. And by buying 12 million shares, the CEO is buying up 10% of the current float, so I thought the company could be worth another look. We can see the revenue for the last 12 months. It's around $200 million. And there's a nice increasing graph of revenues from 2019 to now. Operating expenses in 2022 were a little bit higher as they transitioned to a recurring revenue model and invested in marketing and sales for that Varsity Tutors platform we saw at the start. Over on the balance sheet now, one thing I like to look at is whether or not a company has the ability to pay their bills. We can see NRDY has around $82 million in current assets, while their total liabilities are around 28 million. And in fact, if we look at their total cash, just using half their cash, they could pay off all their liabilities at the moment. So you'll also notice around 11 million of liabilities on their balance sheet is marked as unearned revenue. This is pretty normal for a subscription-based business, so it's on the books as a liability because there is the potential that people may request a refund for all or part of their subscription period. I tend to ignore this liability when looking at a company as a going concern, but it would be relevant if you were looking to wind the company up because you'd need to offer refunds for the remainder of the subscription period. In reality, if the company's going to continue business, it isn't expected that this liability would actually need to be paid back to the subscribers. So overall, a pretty healthy balance sheet. And before we continue, at this point in the video, I'd just like to remind you, if you like content like this, make sure to hit the like button and subscribe for more deep dives on interesting stocks. So from the most recent quarter, NRDY actually reported an earnings per share as a loss of 8 cents per share. Analysts were expecting a loss of 12 cents per share, so once again it was another quarter where they beat analysts' expectations for earnings per share. The actual revenue came in around $51 million, and the revenue estimate from analysts was just over $51 million, so they did miss slightly on their revenues. Key points from their most recent earnings call was with their goal progression. NRDY did make progress on their 3 primary goals for the year. So scaling the winning product for every learner, expanding the number of learners, which they did, expanding by 1.1 million students to 3.3 million students in the second quarter. And their final goal was to lay the foundations for profitable growth. So that involved completing their expansion of their sales team. We have 8 analysts giving NRDY a rating. 5 of them are giving it a hold rating, 2 of them give it a buy rating, 1 give it a strong buy rating, and out of those 8 analysts, 6 of them have actually set a 12-month price forecast for NRDY, the lowest of which comes in at $2, which would still be a double based on today's price, and the highest stock forecast is a price of $6. So a company with growing revenues, a healthy balance sheet, but not yet profitable. Would it be a buy for you? Have I missed anything? Let me know down in the comments. And if you like this video about NRDY, you'll want to check out my other recent video about Nutex's health. Bye for now.